In Canada, why life has become so unaffordable when the Canadian stock market hit an all-time high at 32% in 2025. Well, if you live in Vancouver or Toronto, I'm sure your dream home is still a dream. While the big six banks posted a record return of $16 billion in just 3 months. $800 could buy you groceries for a full month 10 years ago. How many weeks do you think the same 800 would last you now? You're trading your hard work, your time, your effort for a currency that loses value every single day. The thing is, you're not even doing anything wrong. You just need to learn the finance game. So stick around and I'm going to show you how to survive, grow, and invest in Canada of 2026. To fix your finances, you first have to understand the bucket your money currently lives in. The Bank of Canada has held interest rates at 2.25%. Now, inflation may have cooled from its 2022 peak, but what about rent, groceries, gas? Well, they're still expensive, right? The thing is, a drop in inflation does not mean that the cost is going down. A drop in inflation means that the cost is still rising, just at a slower speed. My job is not to chase the next meme stock or the next AI stock. It's to build what I like to call an asset class ladder. It's the financial version of a balanced diet. Imagine if you had one fruit every day for life. Even if it's your favorite fruit, you're bound to fall ill. However, if you add green vegetables to your diet and make it a balanced diet, you don't just grow, you become healthier. It's like investing all your savings in that one meme stock or that one fancy AI stock. Compare that to investing in a mutual fund or an ETF, exchange traded fund with thousands of companies in it. The companies being the green vegetables I just mentioned. Well, math and history, both of them prove that you would have grown and your financial health would have only gotten healthier. So let's begin with short term. Your emergency fund, which is about 3 to 6 months of your expenses, should be in a high interest savings account or a cash ETF or a cashable GIC. You have to understand that the priority here is not growth, it's peace of mind. And peace of mind is needed, especially when there are approximately another 100,000 Canadian jobs at risk of being eliminated. Which brings me to one of the most interesting points of the video. This is a mistake I've seen Canadians make. In my 10 years of banking experience, it's day trading. Let's talk about the fastest way to turn a $100,000 portfolio into a $10,000 portfolio while feeling like a genius. I know it makes you feel like the Wolf of Wall Street or the Wolf of Bay Street. A landmark study followed nearly 20,000 traders and found that 97% of them lost money. I'm gonna let that sink in. You actually have a better chance of winning at a blackjack table. Why? Because day traders trade on dopamine and fear. They never trade on logic. So stop being smart and start being correct. Instead of trying to guess which store is gonna survive the storm, just buy a portion of the entire shopping mall. In Canada, we have all-in-one ETFs, exchange-traded funds like VEQT or XEQT. Now, these are not just stocks. These are portfolios that hold about 13,000 companies worldwide. Now, this is diversification on autopilot. Despite all the dips that you see, well, that's what the growth looks like. It's plain, simple, boring math. Now, since we're talking about a balanced diet, let's look at the spice rack, crypto and gold. In 2026, Canada leads the world in regulated Bitcoin and Ethereum ETFs. You can even hold them in your RRSPs and TFSAs through ETFs like these. Now make sure you invest an amount that's appropriate for you. Remember, spices only enhance the flavor of your meal. They're not for everyone, and they're never the entire meal. What if, like many, you absolutely do nothing and keep everything as is? Well, in that case, you will continue to pay the tax of inaction. Now, according to the Bank of Canada CPI calculator, CPI being Consumer Price Index, what you could buy for $10,000 10 years ago will now cost you $13,000. Meanwhile, the big six banks I mentioned about initially in the video, they pocketed $16.4 billion in profit in just 3 months in 2025. Now, here's a thought. Banks pay you what, 0.3, 0.4% on a checking account, and they charge you 6.5 and up on loans. And guess what? There's absolutely nothing wrong with it. Well, banks are a business and it's perfectly fine for them to make a profit. Making profit is literally the first rule of running any business. What I'm trying to tell you is stop being a customer. Become their owner. Own their stocks through portfolios, mutual funds, ETFs, and participate in their growth. Participate in their profits. To bring everything together, this is your 3-step quick investment checklist for 2026. Point number 1, move your emergency funds in a high interest e-savings account or a cash ETF or a cashable GIC. Try to aim for about 2 to 4%. Once again, the priority is not growth, it's peace of mind. Point number 2, utilize your tax-free savings account. Your total room since 2009 should be about 109,000 if you've never contributed to it. Keep in mind, every dollar earned in the tax-free savings account is tax-free. However, make sure you confirm your TFSA limit with CRA before you make any contributions. Point number 3, talk to an investment advisor and discuss other tax sheltering opportunities and find yourself a mutual fund or an ETF that matches your risk appetite for long-term growth. From my 10 years of experience in this business, I've realized wealth in Canada is never built by working hard. It's built by owning assets that work while you sleep. Now, I know it sounds cheesy and cringy, but the best time to invest was 10 years ago. Well, the second best time is tomorrow morning when the markets open. I'm not the one saying it. It's plain, simple, boring math.